Gargi, what trends are you seeing in the market today? And, what could we expect from the market, say, in the next 6 months or probably even going into 2026?
Clients continuing to seek diversification away from the US markets, which is something that has been very prevalent. Another one is just with more and more, as of right now, expectation of Fed rate cuts becoming more relevant. So a need to step out of cash to really optimize on when the Fed begins to cut rates. And then the last thing I think is a need for diversification to your traditional assets, given the stock bond correlations are continuing to move positive. More asset classes that give you either low or negative correlation. So whether that be something like gold or whether that be other ETF classes that give you that negative correlation.
The first ETF was launched back in 1993. It was SPY. iShares launched their ETF in 2000. Since that time, they've come a very long way. Why are ETFs so popular, especially with the new generation of investors? What attracts them to it relative to some of the traditional funds that are out there?
What we've seen and the expectations for this continuous ETF growth, sort of a 15% CAGR. If we look at just US markets, about 12 trillion in assets. And if we think back to where we were just about 3 years ago, we were around 5. So massive growth there. And our expectation is that this will continue. So the main question is why? One is just the transparency in the wrapper, with more and more investors really wanting to know exactly what they hold. The liquidity available, so you can trade it during the day. Just the ability to quickly trade in and out, having that single stock-like liquidity in a wrapper like the ETF. I'd also say the cost matters. So when you think about an ETF, traditionally they are slightly of a lower cost than many other wrappers. And then I'd say the tax efficiency plays a huge role.
So there are different types of ETFs, right? You've got passive ETFs, you've got actively managed ETFs. Can you tell us, what trends you're seeing within the ETF wrapper itself? And what are investors gravitating towards?
You mentioned active ETFs. That's been a really exciting theme that has emerged over the last few years. Just in 2025 alone, in 2025, there were more active ETFs launched than index. Now, to be clear, the AUM is still larger in index ETFs, but this is an emerging trend in terms of what we're looking at.
So you have your traditional asset classes, equities, fixed income, commodities, etc. Are you seeing other asset classes creep into the ETF wrapper?
Away from fixed income and equities, an asset class that is a big driver of flows in 2025 is digital assets. So Bitcoin has gathered tremendous amount of assets over the last just year and a half since it's been launched. And it's not just about digital assets, not just about Bitcoin, it's also Ethereum that's been increasingly attractive for many people that are looking to diversify their portfolios into other uncorrelated asset classes. And I'd say gold as well has been around for centuries, but at the same time has had a resurgence as investors are trying to think about what asset classes might do well if the dollar continues to depreciate.
Switching to fixed income ETFs, right? Interest rates have been steadily going up. We're now in this environment where you can get a considerable amount of yield. How long do you think that continues? And more importantly, what can investors take advantage of right now in the fixed income markets through an ETF to optimize their portfolio?
It's such an interesting time to be a fixed income investor, and I've grown up in the fixed income markets because, to your point, of the yield levels that are available to any investor. You don't have to be at the end of your life looking at retirement to invest in fixed income, because you can build a multi-sector fixed income portfolio with ETFs and earn yourself a 6% yield. But they're not going to be here forever, right? We are about to resume, we think, the easing cycle again with the Fed poised, or the markets at least pricing in the Fed cutting rates. And I think we've seen a lot of investors focus on certain parts of fixed income, really the very front end of the curve. And now we think investors will take this opportunity before rates lower to extend out just a little bit in duration. But you can also use it in such other specific manner, right? You can use a I-bond ETF to get a very specific duration point. You can use inflation-linked ETF bonds, for example, because you're concerned about rising inflation. ETFs, especially in the wrapper that's easy to transact, liquid, as well as have a lot of transparency, are going to continue to be a pillar of growth.